Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings. Today we're diving into some really interesting stuff. A proxy statement that holds clues about a company's future, its leadership, and how it plans to grow. Think of it as the company's annual checkup, but with a lot more at stake. Don't forget to swing by our Discord community, link in the description, to chat about all things corporate finance. Now, let's get to it. This document is from BIOMERICA Inc., and it is essentially a report that tells shareholders what is happening at the company and what they'll be voting on at their upcoming annual meeting. It is packed with details about the company's leadership, their plans, and how they're managing their money. So get ready, because BIOMERICA Inc. is holding its annual meeting on the 12th of December 2025. And get this, you can join either online or in person. They're re-asking shareholders to vote on a few key things. First up, they want to elect 5 new directors to the board. These are the people who will guide the company as big decisions. Then they're asking for a non-binding vote, which means it is advisory, to approve the compensation of their top executives. Basically, shareholders get to weigh in on how much the bosses are paid. After that, they want to officially approve their accounting firm, Haskell Fee White LLP, for the upcoming fiscal year. Now, things get really interesting with the next couple of proposals. They want to amend their 2024 stock incentive plan. This means they might be looking to issue more company shares to employees as rewards. And then a huge one. They want to amend their certificate of incorporation to drastically increase the number of authorized shares of common stock. Right now, they can issue 25 million shares. They want to bump that up to a massive 300 million shares. This gives them a lot more flexibility for future growth, like acquisitions or raising capital. But it also means existing shareholders could see their ownership percentage diluted if more shares are issued down the line. They also want approval to adjourn the meeting if needed, and then deal with any other business that comes up. Let's look at who owns the company. Zachary Arani, the CEO, holds about 8.3% of the shares. Other executives and directors also own stakes, with the entire group of officers and directors holding around 16.2%. It is important to note that these ownership percentages are based on the shares outstanding, as well as shares that can be acquired within 60 days through options or warrants. This means the actual voting power could shift. Now, let's talk about the people running the show. They're re-proposing 5 directors for election. Zachary Arani, the CEO since 1997, is nominated. Alan Barbieri, an executive vice chairperson, is also up for re-election. They've also brought in Eric Bing Chin and Gary Huff as new directors this year. David Motazetti, who joined in 2023, is also nominated. The board size is actually being reduced from 6 to 5 directors. Zachary Arani has been with the company a long time, since 1986, and as CEO since 1997. His experience is seen as vital for guiding the company's business and finances. Alan Barbieri brings a lot of financial and executive experience from various public and private companies, including biotech and real estate. He joined in his current executive role in 2020. Eric Bing Chin joined the board recently in June 2025. He has a strong background as a chief financial officer in healthcare companies and experience as a CPA. And Gary Huff, who also just joined the board in October 2025, founded a laboratory business advisory firm and held executive roles in major clinical labs. David Motazetti, a director since 2020, is the CEO of Evolus Incorporated, a publicly traded life sciences company. His experience in publicly traded healthcare companies is seen as a key asset. Looking at the board's diversity, there are 5 directors in total. 1 is female and 5 are male. In terms of ethnic background, 1 director is Asian and 1 is white, with the rest not disclosing or not fitting those categories. Now, let's get into executive compensation for the fiscal year ending May 2025. Zachary Arani, the CEO, earned a total of $201,034. This includes his salary and stock awards. It is interesting to note that Zachary Arani voluntarily reduced his salary for cost, saving measures during the fiscal year. He also received stock awards valued at $78,438. Alan Barbieri, the executive vice chairman, earned $127,928 in total compensation for 2025, which also includes salary and stock awards. He too voluntarily reduced his salary during periods of cost reduction. Gary Liu, the chief financial officer, had a total compensation of $311,769 in 2025. This seems to be his full earned salary for the year. This section is a bit technical but really important. It compares the actual compensation paid to executives with the company's financial performance, like its total shareholder return and net income. For 2025, the CEO's compensation actually paid was $177,700, while the average for the other executives was $198,219. Looking at 2025, the company reported a net loss of $4,973,000. Their total shareholder return was 10.89. This means that an initial investment of $100 would have grown to $10.89 over a specific period, assuming reinvested dividends. It seems the executive compensation, when adjusted for the SEC's specific calculation methods, did not directly track the net income, which was negative. In 2024, they had a net loss of $5,978,000, and their total shareholder return was 16.59. The CEO's compensation actually paid was $199,836, and the average for others was $238,392. And going back to 2023, the net loss was even larger at $7,140,000, with a total shareholder return of 39.14. Here, the CEO's compensation actually paid was reported as a negative $108,437, while the average for other executives was $110,778. This negative compensation figure for the CEO is a result of specific accounting adjustments mandated by the CC and does not mean the CEO actually paid the company. Independent directors are also compensated for fiscal year 2025. Catherine Koss received a total of $86,669. Jane Emerson and David Moat Azidi each received $79,169. This compensation includes cash retainers and stock awards. Committee chairs get additional stipends. For example, the audit committee chair gets an extra $15,000. Now, about that stock incentive plan amendment, they want to add 200,000 more shares to the plan, bringing the total available shares to 400,000. As of October 2025, about 121,000 shares were already issued or are part of outstanding awards, leaving roughly 78,000 shares available in the original pool. This increase is aimed at attracting and retaining talent. The plan itself is designed to provide incentives to employees, officers, directors, and service providers. It allows for granting options and restricted stock. Currently, there are about 153,000 shares remaining available for future issuance under equity compensation plans that have been approved by shareholders. This is a critical proposal. BIOMERICA Incorporated is seeking approval to increase its authorized common stock from 25 million to 300 million shares. This is a huge jump, giving the company much more room to maneuver in the future. The justification is to have flexibility for strategic transactions like mergers, acquisitions, future stock dividends, and other financing activities. Without enough authorized shares, the company might miss out on opportunities. The downside, as the report points out, is that this could dilute the ownership percentage of existing shareholders. This is the shareholder vote on executive compensation, the say on pay vote. It is advisory, so the board is not legally bound by the outcome, but they do consider the results when making future compensation decisions. The Audit Committee oversees the financial reporting process. For the fiscal year ending May 31, 2025, they reviewed the audited consolidated financial statements with management and the independent auditors Haskell and White LLP. The committee has determined that all members of the audit committee are financially literate and meet independent standards. The company's compensation philosophy centers on aligning management, total compensation with shareholder return. They pay below market salaries and focus on equity awards. Equity awards like stock options and restricted stock are seen as the critical element of total compensation for their top executives. These awards are often subject to vesting over 4 years, helping to retain employees. Scroll OK. So what does all of this mean for BIOMERICA Incorporated? Scroll looking at the financials, it is clear the company is in a growth or turnaround phase. They re-reporting significant net losses year after year, which is uncommon for companies investing heavily in research and development or launching new products. The proposed increase in authorized shares is a strong signal they anticipate needing significant capital or planning major strategic moves like acquisitions in the near future. This gives them the firepower to do that, but shareholders need to be aware of the potential for dilution. The emphasis on equity compensation for executives, even with below market salaries, shows a desire to align their interests with shareholders. However, the pay versus performance section highlights a disconnect, in a way. While compensation is adjusted by the SEC S rules, the actual compensation paid doesn't seem directly tied to the company, S net income, which has been consistently negative. The strong shareholder return in 2023 is noteworthy, but the subsequent years show a different picture. The proposed increase in authorized shares from 25 million to 300 million is a massive jump, suggesting a very aggressive growth strategy that will require substantial funding. Overall, BIOMERICA Incorporated seems to be making strategic moves for future growth, particularly in its capital structure and executive incentives. The company is clearly betting on future success to overcome current financial challenges. The election of new directors and the proposed increase in authorized shares indicate a forward-looking approach, but shareholders should monitor how this increased flexibility is used and its impact on their ownership. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.